Adobe jumped 4.5% today, closing at $247.60, while the broader market moved meaningfully less. What triggered it? According to reporting from Insider Monkey published in the last 36 hours, Adobe announced a new Acrobat Productivity Agent and separately revealed deep integrations of Agentic AI with major enterprise tech platforms. No acquisition, no earnings beat, just a cluster of product moves that the market decided collectively to price in. That's actually the more interesting story. When a stock moves 4.5% on product news alone, it tells you investors weren't fully pricing in that roadmap before. This video is about what Adobe is actually building, why Agentic AI is different from the generative AI hype cycle, and what the real competitive risks are. Let's define the term because it matters. Generative AI, the ChatGPT wave, produces content, text, images, code. Agentic AI takes the next step. An agent doesn't just answer a question, it plans a sequence of actions, calls external tools and APIs, evaluates the result, and loops, without asking a human for permission between steps. Think of the difference between a calculator and an accountant who can file your taxes, flag an anomaly, email your auditor, and update your books, all in one session. For Adobe, this is home turf. Acrobat, Creative Cloud, and Experience Cloud are already embedded in the document and content workflows of hundreds of millions of users. The agent doesn't need to go find the workflow. It's already living inside it. That context matters when you're evaluating whether Adobe's move here is genuine product progress or marketing rebranding. The most concrete product announced is the Acrobat Productivity Agent. Per Insider Monkey's coverage, the agent is designed to automate multi-step document workflows inside Acrobat. Tasks like extracting data across contracts, summarizing, routing for signature, and updating downstream systems. The reason this is notable isn't the feature itself. PDF workflow automation has existed in various forms for years. What's notable is the architecture. Adobe is positioning the agent to call external tools and integrate with third-party platforms, not just operate inside the Adobe walled garden. That's a meaningful design choice. It means Adobe is betting that being the orchestration layer, the agent hub, is more valuable than being a closed ecosystem. It also means Adobe is now in direct competition with general-purpose enterprise AI platforms. Alongside Acrobat, Adobe also announced integrations of its Agentic AI capabilities with major enterprise tech platforms to automate customer experience workflows. Reported by Insider Monkey roughly 35 hours ago. The specific platforms weren't fully enumerated in available coverage, but the direction is clear. Adobe Experience Cloud, which serves enterprise marketing and customer data teams, is being wired into the same agentic infrastructure. This matters because Experience Cloud competes directly with Salesforce Marketing Cloud, Microsoft Dynamics, and a growing list of AI-native CX startups. If Adobe can automate campaign creation, asset personalization, and audience segmentation through agents, rather than manual Creative Cloud workflows, it changes the value proposition for enterprise customers who are currently evaluating whether they even need a separate creative suite. Now, the competitive pressure, because it's real. Figma's earnings narrative, flagged by Trefis just 15 hours ago, is worth noting here. Figma, the design collaboration platform Adobe tried and failed to acquire in 2023 after regulators blocked the $20 billion deal, has been building its own AI-assisted workflow features. If Figma's earnings showed improving momentum, that's a direct read across to Adobe's core Creative Cloud business. Adobe's agentic push may partly be a response to competitive encroachment from below, not just strategic ambition from above. Microsoft is the other pressure point. Copilot is already embedded in Word, Excel, and Teams. Document workflows that overlap heavily with Acrobat's territory. Adobe's agent needs to be meaningfully better inside PDF and creative workflows specifically, or enterprise IT buyers will simply default to what's already in their Microsoft license. Before today's move, Adobe had been a laggard relative to the broader AI trade. The stock spent much of 2025 under pressure as investors questioned whether Adobe's subscription model could withstand AI-native competition. and whether the failed Figma acquisition had cost the company both cash and strategic optionality. Today's 4.5% move partially closes that valuation gap, but the underlying question remains open. Adobe's revenue model is built on seats and subscriptions. Agentic AI could expand usage per seat. More workflows automated means more value delivered. But it could also compress seat counts if agents do the work of multiple human users. The monetization model for agents is still being figured out across the entire software industry. Adobe is not unique in facing that question, but it is unusually exposed to it given how central human creative labor is to its core customer base. Zoom out briefly, SPY is trading at $739.17 today, and VIX sits at 1843, elevated but not panic territory. The broader tape is not in risk-off mode, which gave Adobe's product-driven rally room to run without macro headwinds suppressing it. In a higher VIX environment, a 4.5% single-day move on product news alone would be harder to sustain intraday. The context also matters for the AI trade broadly. Triple Q at $708.93 reflects a market that has already priced in a significant amount of AI optionality across the tech sector. For Adobe to move 4.5% on top of that baseline, investors had to believe the agentic AI announcements were additive to a thesis that wasn't already fully reflected. That's a higher bar than it was in 2023 when any AI mention could move a stock. So what does today's move actually tell us? 1. The market was underpricing Adobe's agentic AI roadmap before today's announcements. 2. The Acrobat Productivity Agent and the enterprise platform integrations are concrete enough, not just slide deck vaporware, to move institutional money. 3. The competitive risks from Microsoft, Figma, and AI native entrants are real and haven't gone away. Adobe's edge, if it holds, is that it already lives inside the workflows where agents need to operate. That's a structural advantage, but structural advantages erode when incumbents move slowly. Today's announcements suggest Adobe is not moving slowly. Whether the execution matches the ambition is what the next several earnings cycles will reveal. As always, nothing here is investment advice. This is analysis of what moved the stock and why.